Hello and happy June 5th, Friday, very late here in my trading war room as I do this weekend update for you. Matter of fact, as I look at the news, and I'm going to go over the catalyst this week, it looks like U.S. CENTCOM is reporting that U.S. forces intercepted several Iranian ballistic missiles, drones launched over the Strait of Hormuz, the Strait of Hormuz, Gulf's neighbors, and the IRGC says the United States is responsible for the consequences of full Strait of Hormuz closure to oil gas exports if mischief persists, says the statement. So this war is still raging on, and the question is, will we have peace in the Middle East? So we're going to talk about that. What were our drivers of the markets this week? Let's get into it, guys. So the stock market just experienced a massive shift in momentum. We're going to talk about this after a long sprint to those all-time highs early in the week. Wall Street hit a wall on Friday, June 5th. That's today, culminating in the Nasdaq's largest single-day drop on record. And guys, I've been calling this level for the last 4 weeks. You don't believe me? Go back and look at the YouTube channel. Catalysts that affected us this week. The Blowout May non-farm payrolls report that was launched this morning. The U.S. Bureau of Labor Statistics dropped a much stronger than expected monthly jobs report. While a booming labor market is great for the economy, it severely dampened any lingering hopes that the Federal Reserve would cut rates in 2026. And in fact, many investors began actively pricing in the possibility of an additional rate hike by year end. That also concurred with a massive Treasury yield spike. Following that jobs data, the U.S. Treasury yields surged across the curve. The 2-year yield pushed to a 52-week high, and the 10-year Treasury yield jumped to around 4.52%. Because higher yields offer guaranteed returns, they pulled capital directly from the riskier sectors, especially, what's the risky one right now, guys? Tech. Um, We also had this week semiconductor profit taking and tech reversals. High flying artificial intelligence and semiconductor trades ran into severe exhaustion, meaning that started running out of steam at the top. After leading the S&P 500 to fresh all-time highs on Tuesday, the semiconductor index plummeted nearly 9% today. This rapid pivot triggered a broader 1.8 trillion with a T market value wipeout of the S&P 500. Bubble, anyone? Also, with the geopolitical friction that I just talked about, the uncertainty around the U.S. Iran negotiations kept premium on oil for most of the week. Higher energy costs fed right into Wall Street's renewed inflation anxieties, pushing defensive sectors like consumer staples ahead, while smaller interest rate sensitive companies underperformed. Catalysts to watch this week. As I dug through these, we're going to have some tech earnings like Adobe and Oracle. We have global inflation data on Wednesday. We have Thursday, we have European Central Bank and Bank of Canada policy decisions. Um, but this post sell-off dip buying versus a deeper correction argument is going to come into this week. The ultimate psychological catalyst this week will be how everybody behaves. Will be people be buying the dip, or will there be further downside as stop losses get triggered? We're going to try to look at that in the charts, folks. And of course, the catalyst of if peace occurs in the Middle East. Now, that sell off, when we look at the charts, is pretty significant. I would contend what applies the brakes to this sell off is a deal between the U.S. and Iran. That would immediately put on the brakes and we would see it recover relatively quickly in typical Trump administration V corrections on any drops. However, if this lack of a ceasefire and lack of positive negotiations continues, I would expect further downside. And I know it's a little fatiguing to talk about. We've talked about it since February 27th. It's just unknown at this point. So without further ado, let's get into the charts and see Let me find my correct charts, guys. And also, while I'm digging these up, I want to thank you for taking the time to be with me as I do these reports, to trust me with your analysis, to reach out and ask questions, to comment, like, subscribe, and share. If you find these useful, please send them to others. Let them know where to find me. Um, and I'd be remiss to say that the views on these charts are mine and mine alone as a certified research analyst and expert trader. And I encourage you to do your own due diligence and try to learn the technicals that I do. I do offer courses and lessons on that, but all these calls are mine, and any trading is risky, and you can and this is not financial advice, folks. So, all right. Find my charts I was working on for everybody. 1 second. We'll get this built out. I changed my setup this week, so nothing's in the same place. That's why we're a little slow. All right, folks. Hope you're preparing to I hope you had a good week and preparing for a good rest of your weekend. All right, into the charts, my friends. As always, we're going to start with the indices. This is the Nasdaq and the largest sell-off in history just today. If you combine that for midweek, also the largest sell-off. So today, the Nasdaq sold off about 5%. That's a pretty significant drop. Now, I have said, and you can go back and look at the recording for weeks, that I really felt this red box was our top in the resistance. And I've been proven correct as of now, right? If you remember from our last time we spent together, I said the only thing that blows us through this box is a peace deal in the Middle East, which could be our blow off top. But the non-farm payrolls really might be the straw that broke the camel's back. Again, what's going to be needed in order to put the brakes on this is a peace deal. However, you're going to see on my charts all our typical indicators we talk about, but I have turned on the motor behind my matrix, not the entire matrix system, but this is the momentum indicator because I want you guys to see the momentum on the charts, right? This is a proprietary system built by me that takes into account about 6 metrics. Now, you can see orange initial weakness. Even on this drops initial weakness, if we get into aggressive bearish momentum, it's going to continue down. On this drop, I want you to see that we have price down, volume up. That is supportive of a further drop. Again, everything I say this week or in this meeting, in this recording, can be reversed beginning of the week with a peace deal. We're going to make the assumption on most of this that we're going to just read the charts and we're going to head further down. So we're going to look for that support. All right. The run anchored VWAP is this green line right here. See this? This is when the run started. This epic run since the end of March. This is the volume weighted average price anchored to the movement or to the initial move and the trend. Now, that is measured. We also take a full Fibonacci measurement of the entire move, and we break it into the golden ratio and the confluence of that anchor VWAP. So, guys, with this much velocity, I'm targeting or saying that we're probably headed to 27,500 to 27,850 is probably our next leg down, right? As it searches for support. Can it go past that for sure? But this is a nice confluenced area for fine support. You can see that we have market structure right where I set this alert that we set together in one of my previous YouTube videos. If market structure breaks, we're certainly going to see that level. So if you're trading anything in the NASDAQ or NASDAQ related products, that would be your price target, right? If you want to short the NASDAQ and you want to go, you can buy, I know it seems strange, you buy an inverse S triple Q. I did that in my own account. I am I shorted SQQQ right over here, went into a little bit of a drawdown, and now I'm massively in the money because I shorted this red zone because I put my money where my mouth is. Again, guys, if you have questions, you know where to find me. You can comment on this video. You can reach out in the channels that you have me. So that's what I'm looking for. Um, Without a peace deal, we're going to see that level right there as the indice finds support. Same thing in SPX here. The run anchored VWAP is here. The 618 is just slightly below it, so we confluence the average. We're probably heading down to about the 7,100 range. 7,100 range. If, again, the same thing, the structure breaks here. The market pulled back. All the markets pulled back in this time period in May. And if this market structure, remember, price sets the first support resistance in the market. So there's support here. If that breaks, also confluence with the 786 fib, we're going to see this zone. And you can see price consolidation here also supports it. So we'll be targeting um, around 7,100 for potential support on this drop. The velocity in the S&P was not as high as it was in the Nasdaq. Why? The Nasdaq is very tech heavy. Not that the S&P isn't, but the Nasdaq is very much weighted that way. So this is really good uh, volume. You can see where I put my cursor. It is higher than um, much of the other volume that is included in that. So this is pretty significant. It did not sweep out the buying that occurred just after our last YouTube. However, this is significant selling. The Russell 2000. So looking at the Russell 2000, I said that I felt the absolute top, commensurate with the other tops that I was calling, was right around 2950 to 3000. Well, I missed it by a few points, didn't I? We came in and we turned hard back down. Again, we have market structure support clearly here in this green box at 2720. The anchored VWAP from the run. Let's see if I have it in there. I believe I do. I think it's this one here. It is. So we could see some support prior to hitting that, but I really believe we're going to see 2,700, right, with this velocity. That's not far. It's only another 100 points. It's not unrealistic for us to hit this zone and probably more rapid than that. And this is your small cap. So down we go. The volume is high, but in order to break this level, in order to break support, you need a lot of velocity. You can see that we have another velocity shift or change to the downside. And if we get it coming into this, we will break this zone. However, that's heavily calculated on volume. If we don't get enough volume to sweep out these buyers, we may bounce here before it makes another decision to fall through. So I'm calling the support zone right now around 2,700, at least for the first test. Bitcoin, I'm going to tell you I told you so because I've told you so. So listen, Bitcoin, I have called a bull trap ever since it's been running up here after this initial drop. I said, stay out of it, stay out of it, stay out of it, like a broken record. And I said, it's going to find support between 59,000 and 60,000. Where did it drop to exactly, folks? See, once you know how to do this, you cannot unsee it. Once you learn technical analysis from me, it will change your trading and investing life. Fundamentals are about what to buy. Technicals are about when to buy. So you can trade plan really strongly around this. I would want to see support in this area before I'd be a buyer. And even if I was a buyer, I'd be a shorter term swing trader in it because our crypto experts say cycle low 50,000, 48 to 50,000 in October. Let's look at oil, folks. So the key levels that I've talked about in oil have held true, haven't they? As long as we don't have a peace deal, the support in oil is going to be around 84, high 84, right in this green box. So we're going to call it 84 to 85 and a half is going to be the support box. I'll be buying off that box if we don't have a deal. And then I will sell it as it reapproaches 100. And again, I don't want to sound like a broken record, but we're still in this same channel selling 111 to 113 for shorts and buying down here. Once we have a peace deal, it's going to drop through that. So you want to have a protective stop loss. If you buy here, you would have a stop loss. So what would that look like, you ask? A buy, I'm going to move this guy out of the way. We're going to do a long trade plan in that box. I would do a stop loss. So if we're buying medium, I'd do like a $2, $2.50 stop loss. And if you're doing it on leverage, need to adjust that and run it right back up to 100. And of course, you would trail it. So the percentage of you hitting 100 is less than the percentage of hitting a positive trail, right? Because if it bounces off this, goes $2 to $3 in money, you need to be break even. Remember, trading is running to break even. Trading is more about protecting your capital than it is making money. Play defensively, folks, and you will succeed. Google sold off strongly. You see this gap down. The reason why Google sold, as I announced in the early part of the meeting, is they diluted their shares. And if you're an investor in Google, you hate dilution because they're offering more shares, so your shares are ultimately worth less by percentage, right? It did rebound. We do have strong momentum. You see the aggressively bearish momentum. So this rebound is a bit weak on the volume side and is approaching the gap that was created on that announcement. And we may have more downside. Although I am on record thinking and saying that in 2026, Google is probably going to be your winner in the sector. And we have market structure support right here at the bottom of this box. So I would look for support in this area. But if you want to buy it at a great discount, I like the $330 range. I would start looking into that. I don't think we're going to hit that immediately, but if we hit it this week, we'll be definitely talking about it. 300 for sure, guys. So keep an eye on Google. Right now, I don't think it's a buy sell. It's more of a hold and wait. Let's see how this week pans out with greater velocity because we have strong momentum. So I don't trust the bounce. Microsoft. Let's talk about Microsoft. Um, Really not interested in it until we hit the IPO anchored VWAP down here. We get a discount. We're going to have structural support in around 350 to 360. It is selling off and momentum is beginning to shift. Let's see if we can get a better discount. So Microsoft right now is a wait. Right? It's not a buy or sell. It is a wait. You could have sold this all-time high anchored VWAP. Hindsight being 2020. You see how that played out. Although I wouldn't have shorted Microsoft. I'm waiting for the discount. So Microsoft is a wait. Oklo. Nuclear thesis. It's in that buy zone. We have tested the IPO anchored VWAP. We do have some market structure kind of right down here on this last one, about 53.90, but momentum is high. So in order to buy this trade plan, we want it to give us a couple green candles and a shift positively, like a yellow dot or early recovery, where we're seeing momentum shift and volume come back in. Volume is one of the calculations within my proprietary motor here. Again, I'm bringing this in to our YouTube video because we had so much momentum this week. We want to calculate where it's at, where it's shifting, how strong it is. So Oklo, we're at our buy zone. So it's in our area of interest, and we're going to wait to see if it confirms to hold to buy and enter, and we run it to the all-time high anchored VWAP. MP Materials, if you bought the IPO, or I'm sorry, the all-time high anchored VWAP, it did run up. There's an argument to be made that you could have been to break even or reduce risk. If you did not, you probably realized your full stop loss. You took a small loss, and now you're going to look to buy a greater discount. The greater discount, obviously, is going to be the IPO anchor VWAP down around 41 or 42. We do have some market structure support short of that. Again, there, as you can see in momentum, it hasn't shifted from aggressively bullish, but if we get a downshift, it may go deeper. But if it doesn't, it's not going to penetrate further down. So we'll keep an eye on it right now. I'm interested in it, and it's okay to demand a discount in around $42 or better. Let me know in the comments if you bought this trade plan, if you took a stop loss in it, and where your stop loss was. Remember, part of successful trading is also taking disciplined losses. Let's look at some AI plays. BBAI gave us a nice buy signal here and ran up, almost hit our price target at the all-time high anchor VWAP before turning with the markets. Remember, market pressures will affect individual stocks. I still like this buy plan in around the mid $3 range to max of $4. And my long-term price area of interest is right down here in the $2 range. So we're going to watch how this develops. We do have shifting momentum, which is not surprising because everything shifted, taking a turn towards negativity. We're going to see if this area holds. If you bought this on this trade plan, I would hope that you got kicked out on a positive in the money trail. And if not, as we're approaching this, you need to be break even. Let's say you bought it at 375, 390. Put a break even stop loss in, folks, right? Put a break even stop loss in. Don't take a loss in this trade. Re-enter it when we get a discount. I know it can seem frustrating, but that's how successful trading goes. You got to play defense right now because it's a great play, but you got to defend against market pressure. Pony. Pony has an AI stock. Didn't have a trade plan for it. I said it looks horrible. We need to wait. So we're still going to wait. Going to see what happens down around $6. So keep it on your watch list, set some alerts, and I'll keep an eye on it for you. Let's look at D-Wave, QBTS. This trade plan previously paid successfully to the all-time high. This second trade plan off the all-time high started to pay. If you went to break even, you got kicked out of break even. If you're still in this trade plan, I would honor your trade plan and take the small loss because you're probably going to get a better discount because now we have orange momentum. When it turns red, it's going to go down deeper. We did have the institutional buy of the golden cross right here where the 50, which is the purple line, crossed the 200. So we might get a little bit of decline, but this is usually a strong indicator that it will continue upward. So QBTS also a lot of insider buys in the Trump administration on this one. So I like the discounts on this. I mean, if for some reason we see 15 again, it's going to be a buy all day long. And that's right around where I got kicked out. I would definitely rebuy it uh, at $15. So we're going to price monitor this. Let me know if you need help with that. I do want to point out that the red box up here where I said that when this thing was running, the market structure is going to provide resistance, and look where it stopped. Not only the one time when we had our last YouTube meeting, but also this week, right? When you understand how to search for support and resistance, you will understand how to take profit, put your stop losses, and know where you need to position to be outside of support and resistance to stay in the trade, folks. IonQ is still looking good. We had the IPO anchored VWAP buy to the all-time high and then the confirmation of the all-time high upward. Now this has paid more than 50%. So if you bought it in this area of 50 or $47, please put in a break-even stop loss. If not, lock in some profit, and perhaps because it paid over 50%, you'd already locked in profit and got kicked out. The next buy area is still a test of this all-time high, but since it's moved up so strongly, you need to change your trade plan to break even or in the money. QUBT, you can see that I've spotted where a golden cross might occur, and I said that we'd have to break the all-time high to do that, and we got rejected and have dropped down. So we're going to have a rejection of this golden cross. Now, as volume comes in or momentum turns in subsequent videos in the next couple of weeks, we could see that occur, especially if positivity comes back into the markets. But as of right now, it's not a buy or a sell until it drops lower. So this is a wait. It has not given us a signal. Quadruple U, right? So energy fuels. The proposed buy plan looks like it's about to fail here on market pressure. This is still a great thesis. The next buy zone, guys, I'm interested in is down here on a discount. You see this wick. This is market structure providing us support. So in between $12 and $13, we do have strong momentum. So it's not unrealistic for us to see that level. Matter of fact, if momentum is strong enough, it might go through it and come back up, which would be great because that would be confirmation that we hold, and we would run that to that all-time high anchored VWAP. So let's keep an eye on quadruple U. I know a lot of you folks have bought it. Let me know. Are you still in the trade? Are you out and ready to buy at a lower price? Ego. Let's get into a couple miners before we get into gold. Gold is selling down and precious metals are right now. There's a lot of pressure on that because the dollar is stronger and the DXY index is stronger. And when they're stronger, precious metals go down. So it is actually right at our buy zone that we've targeted multiple times, the all-time high. The problem now is the momentum is higher, so we may break through this. If you've owned it, I would consider a break-even exit because the next entry point is going to be lower with this momentum if we drop down and if gold continues down. Otherwise, this may hold. If we get some recovery, this may hold. So I'm not saying that this entry is not good. I'm just concerned with momentum. So we may get into drawdown before it turns, and then certainly down around 22.87 to 23s. Definitely an interesting area where that IPO anchored VWAP exists, that white line that you see. HYMC has sold off strongly here. Same thing. Right down here's my buy zone. It's the trade plan I put out last week for you that is still there, right in the middle of this gap. So with the momentum, price being at 26, it's not unreasonable to think that we'll get to 19 to 20 right in here for a potential support test. And I think that long-term Hycroft mining will be good when gold returns to its lustrous pricing. Iron is very interesting, folks. A lot of buying in the Trump administration for iron as it's coming down. I like a buy off the all-time high anchored VWAP at 49. So anywhere between, 48 to 49, consider buying with a stop loss that's commensurate with your risk. I don't think that's unreasonable. And if you can endure wider risk, you can, because this should be good with this administration and how they're buying it and touting it. Further discount would exist at 31.50, where we have confluence of anchored VWAPs and market structure should this collapse. But I want you to notice here, we're setting higher highs and even higher lows. So if we hit that buy plan and it runs, we are still, and if you can't see it, let me help you see it. You can see how it's in an uptrend. This is the low, this is a higher low, higher low, higher low. So this may be just the discount we're looking for in iron. Let's get into precious metals, shall we? Looking at gold, XAU USD. Now, 4,400 was a zone that I identified, and it paid multiple times on short-term trade plans, right? And now it has failed. So we need to target where it's going. Of course, we always want to know what that all-time high anchored VWAP is. It's currently at, that's the red line, 47.86. Now, if I turn on the key levels on pricing, let me turn it on, you're going to see that every 100-point step should provide some support. 4,300, yes, a lot of strong momentum on the daily. Look at this, guys, red. So I see a little bounce here, 4,200 and 4,100. Now, of all these levels, I want to point something out to you. Turn on the matrix because it puts these levels in for you. You don't have to build them. You see this wick where we had this within one day, price moved 400 points and down and 400 points back up. I believe that it's going to be very smart to have skunk orders, meaning having orders sitting right around 4,100 to 4,115 to try to catch kind of a flash wick down. Can you imagine if you did that there? How much money did you make? Look at this. If you had one there, it ran all the way up to 4,900. That's 800 points or dollars times your leverage and profit. And it's market structure, folks. Market structure will provide support. So I would have a skunk order at 4,100. I'll certainly be buying there. And then after that bounces, if we get a strong move down, I'll be break even or in the money. And then I'll definitely be buying the confluence of 4,000 and about 4,025 where this other anchored VWAP exists from a longer term run. You can see this green line here that we've back measured. So 4,000 and 4,100 are going to be very interesting. I'm not saying that there's not going to be support at 4,300 and 4,200 because they certainly are key psychological support. But man, what a discount at 4,100 and 4,000. When and if we see it, folks. Now, let's get into silver, XAG, USD. Let me turn this back off for you, because I want to talk about levels that I've been talking about. All-time high anchored VWAP is now 79.20. You always got to know that number. And 71, retested it once, come back up, and it failed the second time. So below that, I said 64, and then look at this, guys. 54 might be, with momentum, we might see that as a flash wick like this, but we're going to have to break through kind of the 63 to 65 range to get there. And we still have one more shift in momentum, and if that, which would increase our velocity. So guys, skunk order 54 all day. You can see the market structure from the hard run, bounce, and then we push through, tap twice before we push through it. That should be really strong support. I would heavily recommend buying in around $55. You can see it's 54.97, kind of in the middle of that. Have a skunk order. Skunk order means an order that stinks way low, right? So you can catch a wick. Because if it taps that and then runs right back up to 71, you're going to be very happy. So keep an eye on 64, but 54 to 55 would be an amazing buy by time the end of the year rolls around or a year from now. So I like those levels. Platinum paid on our trade plan, shorter term, about 100, 150 points multiple times before it collapsed. Because remember, every time it touches the level, guys, it touches the level, it will eventually break. And on the downside, we look at market structure similar to that wick that we saw in gold. Market support down around 1,700 would be the next area of interest for me to try to buy and foster that into a swing. We could target the all-time high anchored VWAP at 2,050 and trail it upward where you're locking in 50 points, 100 points per step. So keep an eye on right around 1,700. If I can get my number right. There we go, guys. So it'd be the full width of that would be 1685 to 1715 in XPT USD Platinum. Palladium fell right through our level. Surprisingly for this one, guys, it tapped off it multiple times and then failed strongly, kind of like Platinum did, but it really truly didn't touch 1,300 before it collapsed. The next level in Palladium, unfortunately, what I'm seeing here is about 1,000 to 1,100. So because 1,000 is such a nice whole round psychological number and a lot of buyers will buy that, I'm going to hold off and not buy until we get into a thousand, probably somewhere between 1,000 and 1,050. And then of course we can target market structure here for a 200-point gain, or optimistically right back up to the all-time high anchored VWAP. So I'm not interested in Palladium until we hit 1,000, and there I'll be consider buying. Copper, folks. Let's talk about copper. It's coming into, again, strong thesis. I mean, experts are saying this is going to be $10 to $12. So we're buying discounts right now. I still like the 605 to 610 range right here, and then at a greater discount, this previous all-time high anchored VWAP at 590. So keep an eye on those zones. But we should have it should actually believe me, it should have support coming in between 590, $6, 605, and 610. So it's gonna take a lot to break those levels because you can see it's setting higher highs and higher lows in that same uptrend because copper is strong. If we get down in here, we're going to be outside that two standard deviation and we should return back on trend when the dollar cools off. Wheat paid massively on the only trade plan that I put out on it, although we're price monitoring it now. So if you're interested in wheat, market structure support at about 567, and I would hold off to see how it reacts there. Let's look at a couple of our wartime stocks because, yes, folks, the war is still going on. ITA, the aerospace, is dancing right around that all-time high anchored VWAP where you could set up a trade plan if you like it. Stop loss right below the swing high, and then you run it right back up to all-time highs or the median regression trend line. So buying in around 228 to 230 and then running it to 260 and with this $5 stop loss. Shield is right on the IPO anchor VWAP, but it's there with high momentum. I would wait for momentum to cool off. In other words, buy side candle and buy side volume to return, and then run that to the all-time high anchored VWAP. It's Global X Tech ETF. So keep an eye on that right now. I would wait to see how it reacts. Palantir is providing us a discount, and the discount range that I like in this is about 125 to 127. If we hit that range, you could potentially run it right back up to the all-time high anchor VWAP at 155 or 156. So keep an eye on this. Palantir is getting really interesting. You can see the historical support we've had at that price. So investors like that price, and perhaps you should as well. XOP, the State Street Spider S&P oil and gas exploration is kind of running sideways. My next area of interest for buying is about 156 to 159. And if it gets down there, we're going to see if we can get a discounted buy or entry. Finally, the one that I alerted all my followers, you wonderful people, to buy is Len, the building uh, and construction, building and construction uh, stock. What did I want to call it? An ETF? But it was in the buy zone. We triggered once, could have triggered twice, and around $83. We're up to 90. We're $7 in money. So we're realizing our gains on that, targeting the all-time high anchored VWAP, but it's paying us that 50-cent dividend per per share just to hold it. That's why I identified it for you guys, because I felt this was going to be a winner, and so far it is. And I'll find more for you guys in upcoming videos as well. Now, one thing I do want to say that I promised you last week that I would have a whole bunch of new stocks and get rid of some of these instruments. I want to push that out a week. The reason why I changed is so many of you follow these particular stocks and we had so much velocity. I want to identify discounts for them. As we stabilize, I will be finding additional things for you to buy. And as always, if you comment below, stocks or instrument you're interested in me analyzing, if I get enough people, I'll throw it on my watch list and we'll analyze it together. Guys, if you found this useful, I would appreciate if you share this with somebody, let them know about it. And I'm live on social media every Monday through Friday, 9 a.m. Eastern Standard Time for 20 minutes doing my pre-market report and answering your questions. And the social media I'm broadcasting live on is my Student Alpha 1 on Instagram or Student Alpha on YouTube. You can find me there live and I can answer your questions. And always, whatever group I support, I'm kind of the technical analysis hitman. Hit me up, ask me questions, and come learn, and we'll make money together. Enjoy the rest of your weekend, folks.